Every day, over $7 trillion change hands in the global Forex market. For a trader in Chile, accessing that massive liquidity offers opportunities that simply don't exist on the local exchange. Naturally, when setting up an account, you might look to the Comisión para el Mercado Financiero, the CMF, to watch your back. They do an excellent job keeping domestic banks and stockbrokers stable, transparent, and fair. But if you are looking for the high-leverage MT4 and MT5 platforms required for retail currency trading, you have to look past Chile's borders. And the moment your capital crosses that border, the CMF's authority stops cold. They do not license offshore brokers. They do not supervise them. If you run into trouble with a firm based halfway around the world, the local safety net isn't going to catch you. The responsibility of due diligence falls squarely on your shoulders. You have to build your own regulatory shield. Opening an account with an international broker is perfectly legal. The challenge is security. You have to shift your trust from local authorities to strictly vetted international watchdogs. Strict fund segregation is the most important defense. It ensures capital flows into a dedicated vault, physically separated from operational reserves, so it cannot cover corporate debts. You guarantee this segregation by verifying top-tier licenses from the FCA, ASIC, or CySEC. But a license alone isn't enough for smooth operations. You also need a platform that supports native Spanish customer service and offers convenient local funding methods to handle Chilean Peso seamlessly. Locking in a heavily regulated, locally compatible broker is the baseline requirement. Without it, your trading capital is entirely exposed. Once your account is secure, you actually have to trade the market. And looking at the local currency, understand the Chilean peso behaves wildly differently from major pairs like the euro or US dollar. Chile is the world's leading copper producer. When the price of copper rises, a massive influx of US dollars enters the Chilean economy, immediately driving up the value of the peso. You also have to closely monitor the actions of the Banco Central de Chile. Their interest rate decisions directly dictate foreign investment levels, pulling the currency up or down with every rate hike or cut. Finally, as an emerging market currency, the peso acts as a barometer for global risk. When the world economy looks uncertain, investors panic and flee to safe haven assets, draining capital out of the region in minutes. Combine volatile commodity prices, shifting central bank policies, and sudden global panics, and you get massive price swings and notoriously wide spreads on the USD to CLP pair. To visualize how to survive those swings, look at this risk constant model. If you risk $100 on the euro, you might use a tight 20 pip stop loss and a large position. But the daily volatility of the peso often requires a massive 500 pip stop loss. To keep your total risk locked at $100, you have to drastically shrink your position size. Surviving an emerging market is a mathematical discipline. You expand your safety net by deliberately shrinking your exposure. Closing a successful trade offshore is only half the process. Bringing those profits back home triggers a completely different set of domestic responsibilities. Under Chilean law, financial investments in foreign exchange are classified as taxable income. You must treat your trading as a formal business activity, maintaining rigorous records of every win and loss. These earnings fall exactly under the Impuesto Global Complementario. If you fail to maintain a continuous, accurate log of your transactions, you will hit a serious compliance wall at the end of the fiscal year. Trading from Chile means acknowledging the strict limits of local institutions, aggressively vetting your offshore regulators, and adapting your risk models to survive commodity-driven market shocks. By executing rigorous position sizing, meticulous tax compliance, and partnering with a heavily licensed international broker like FXNX, you neutralize the chaos of an emerging market and build a sustainable mathematical edge.